Today is a video I'm really looking forward to making because today we're going to be helping you newbie investors. Some of you watching out there have no idea what stocks are, or you're just beginning investing and you don't know a whole lot about them, about what makes a good company. Now today we're going to give the basic overview of how to get started because we're about to start the new year of calendar 2023, and if you haven't gotten started investing already, now is the perfect time. Many companies across the board like Amazon are down 52% this year. Or what about companies like Apple? Apple is currently down double digits as well. Within the last year, they're down about 31% within the last year, and there are many other companies like this across the board. Big tech, small cap companies, different industries across the board, these are all down, and now's the best time to be buying for the long term. Microsoft, as you can see as well, is down 31% year over year. So what we're going to do is we're going to go over my top 5 step-by-step solution on how to get started investing in 2023. You're about to see a sponsor here in just a little bit. If you're brand new and you're wanting to get started, I would recommend you get started with them because they can give you up to 20 free stocks for starting, so more on that in a second. But in this video, you're going to give the basic overview of what you need to get started. We're going to talk about getting started with budgeting, automatic transfers. We're going to talk about what stocks, ETFs, and just basic investing methodology is. We're going to talk about managing your emotions. That's very important in the world of investing. And then we're going to talk about what actually makes a successful investor and what are the positive traits that you need to follow if you want to be like these people right here. So it's going to be a fun one. Let's go ahead and get started. But before we do that, let's get a word from our sponsor. But before we get into all that, we have to talk about today's sponsor, MooMoo. MooMoo is a new up-and-coming brokerage that is taking the world by storm. Commission-free trading, level 2 data, advanced technical indicators, earnings calendars to see the date of financial statement releases, and institutional tracking to follow Warren Buffett's portfolio are just a few examples of what MooMoo has to offer. With this being my first sponsor in the channel, I have fully vetted their company and stand behind their vision. MooMoo currently trades on the NASDAQ under ticker symbol FUTU for FUTU and is SIPC insured. If you sign up below using my special referral link, you can get anywhere from 1, 10, or even as high as 20 stocks for signing up when you use my special referral link down below in the description or in the pinned comment down below. Free stock amounts can be as high as $1,000, so sign up now using the link in the description or pinned comment down below. You would help support me and my channel by doing so and give yourself an edge in the world of investing. Thank you so much, MooMoo, for sponsoring this video. Now back to the content. They're really great guys, so check them out down below in the description or in the pinned comment so you can get signed up today and get started in 2023 with your investments. But without further ado, let's go ahead and get started with number 1. Starting a budget. A budget can look many different ways, and there's all different types of platforms and different ways you can track this, whether it's budgeting apps or Excel spreadsheets, however you want to do it. Across the board, you need to get started with a budget because if you don't know what's coming in and going out each month, then you're likely not going to be able to invest. And not only should you be investing, but you should be saving. You should be tracking your expenses, tracking your net worth, because if you don't even know what you have, how are you ever going to grow your wealth if you don't even know what you have? I have multiple spreadsheets including monthly budgets, net worth portfolios, tracking my investment performance, lots of different things like you guys see across the board. And some of these, as you can see, get very in depth, like where I track and compare my investments against many other companies and many other things in the stock market in general, and it all gets very in depth for me. But I go a little bit overboard, but generally speaking, you should be starting a budget. Next, speaking of budget, and this goes hand in hand, making monthly recurring investments. Now, Fidelity here is an example. This is one of the brokerages that I've used before. This is an example of how they have two different options between setting up automatic investments and setting up recurring transfers. Regardless of which one you want to do, you should be making this in your budget and make this a set in stone without a doubt. Treat it as your rent or your mortgage payment. The moment I start making our budget, before I even factor in anything other than food, water, and housing over our head, I'm looking at the investments. I transfer $500 a month at the beginning of the month every single time without fail, and you should be doing the same. Now, your numbers may look way different. You might be investing $20 a month. You might be investing $5,000 a month. Whatever that number is for you, set it recurring so you can set it and forget it, and you don't have to think about it, and it's done automatically. Because if you're relying on your own memory to try to do it, you likely won't get it done. This takes us to number 3. Learn about what stocks, bonds, ETF, commodities, etc., and many others, what they actually are and how you can actually own them. Now, stocks is really what I focus on mainly on this channel and what most investors are really focused on. And for good reason. They're the perfect balance between risk and reward, and they're the most popular investment out there by far. Now, if you don't know what stocks are, begin to do basic research. They're essentially just ownerships of companies. So, for example, like So, for example, like a company that many people know and one that is one of my biggest investments, it's actually my second largest in my portfolio, is Amazon. Amazon is a company that we all know and love, and it's extremely simple. If I buy shares of Amazon, if I buy stock in the company, then I literally own a small, tiny, teeny little piece of the business. So, every single dollar that they bring in revenue, a little teeny, tiny sliver goes to me, like a slice of the pie as you can see here. ETFs is an example of another thing that you can invest in. This is very important. And ETFs are what I recommend most beginner investors getting started with because you invest across multiple different companies. So, for example, of these six, I happen to own two of them. I do own Salesforce and Amazon. I invest in individual stocks, but these are examples of ETFs that you can own multiple companies while buying only one ticker. Now, there are many different types of ETFs, including certain commodities or currencies or certain stock indexes or industries, leverage ETFs. This is really in depth, but really what you need to focus on is just number one, stock index ETFs, and it can give you a very basic overview of how the stock market works. So that's number three, learn the basics of what investing actually is, and then you can apply it to the real world. Number four, get your emotions under control. Now, this is very, very hard to do as a beginner, including myself. This was my biggest number one fail before I learned anything. I failed at this miserably. Sometimes I even still struggle with this. I've gotten significantly better, but this is really hard to do in the beginning. Getting your emotions under control. It's very easy when stocks go up to get greedy and excited and joyous, but when they go down, your emotions fall down with them. This is not what you want to do as an investor. This right here, number four, is the hardest part to get under. If you can master number four, then the rest comes very easy. And this goes hand in hand with number five, which we're about to go over right now, which is what actually makes a successful investor. Do research into what actually makes good stock market investors. Not people that have been in the game 6 months or 9 months or 12 months, a year. It doesn't matter what you're doing in the short term because stocks can go around all over the place. I'll use Amazon because this is perfect for a beginner video because everyone knows Amazon, not only as an investment, but as a company. Everyone knows Amazon. Stock prices go all over the place. So let's look at the week. It's been up, it's been down, it's been all over the place. We look at the month. Up, down, generally going down this month, but it's all over the place. 3 months, you see a big spike down, you see big spike ups, you see a little ride and wave down. What about the last 6 months? You see different gyrations, you see several months of uptrend here, big downturns across the board, you can see that. And when you get to a year, things start to stable out a little bit, but generally speaking, things gyrate a lot, even over a 1 year and 2 year period. The last year or two has been pretty bad. And you see consistently, this is what stocks normally look like when they're pretty flat over 2021. And then 2022 has been a really bad year because things have been trending down. But notice the further we zoom out, when we get to 5 years, things are starting a little bit better. Things are looking a little bit more stable. Now you can see that we still have gyrations up and down, but the big movements up and down start to become littler and littler blips on the radar because overall the stock is trending upwards. Same thing if you go out to a 10-year chart. Things you can see, generally speaking, work out in the long term, and then if you get to the all-time for Amazon, it's ridiculous. 83,000% returns, one of the best stock market performers of all time. This thing was literally a fraction of a dollar 20, 30 years ago, and now it's almost $1 trillion business. So you get the point. What makes actual good investors? I would recommend researching people like Warren Buffett. He's one of the easiest to understand. He has a million different publications about him. And just look at that smile. And also, one of my favorites, probably is my favorite, Peter Lynch is a perfect person to look at. Look at his investing track record and what actually made him a good investor. He has many speeches on YouTube and things you can watch that can help you get started in the world of investing. And it's these type of people like Peter Lynch, Warren Buffett, Charlie Munger, many different investors like this who honestly not only can show you how to be really good as an investor in the world of the stock market, but can also teach you how to be very disciplined, how to be a good person, and honestly be someone of moral character that you want to look up to. But overall, guys, if you can follow these are the 5 basic things to get started as a stock market investor. And if you haven't done it already, now you need to do it in 2023. So do these 5 if you haven't already. Follow me along the way. Get signed up for MooMoo because they're sponsoring this video and they're giving you a great opportunity to make some free money to get started, guys. Sign up. It's a perfect opportunity and you'd help support me and my channel. Thank you guys so much for watching, and I'll catch you all next time.